Hey everyone, welcome back to Corporate Decoder. Today we are looking into a company that wants to combine with another, but it seems like they're shuffling their directors like a deck of cards. It is an interesting situation, so let's get to it. If you're interested in understanding what's going on behind the scenes of corporate filings, make sure you subscribe and join our Discord community, linked in the description below. It's a great place to discuss these topics further. This is a report called an 8K, which companies file when something important happens. This one is from Hennessy Capital Investment Corp. It seems they are trying to do a business combination as merging two companies into one. To do that, they need to get the approval of their shareholders, so they have a special meeting for that. First thing we see, the company had to postpone their special meeting. It was supposed to be on May 5th, but they pushed it to later that same day. It's like saying, oops, we're not ready yet, give us a few more hours. Now, here's where things get interesting. After sending out the documents for the meeting, called a proxy statement, they changed their mind about who they wanted on the board of directors. They withdrew Mark Harris as a nominee and instead nominated Tito Botelho Martins Jr. Basically, they swapped out one person for another. The report says the decision to replace Mr. Harris wasn't because of any problems between him and the company. Mr. Martins agreed to be the new director. Because of the director change, they had to update the proxy statement with a supplement, basically an add-on. So the shareholders have the most up-to-date information. Think of it like getting the latest software update right before you use an app. This part is all about who's running the show after the business combination. They're changing the information in the proxy statement to reflect that Tito Botelho Martins Jr. is now the director nominee instead of Mark Harris. The company says who's expected to be on the board, which includes Tulani Sikwila, Ibrahima Tools, Faisal Machunu, Molly P. Jung, Dennis A. Johnson, and Tito Botelho Martins Jr. Seems like the people on the board are based all over the world. Then they say that Mr. Martins is 62 years old and will be a director. The report then gives us a little background on Tito Botelho Martins Jr. He has a degree in economics and an MBA and has worked for over 35 years in the metal, mining, logistics, and energy sectors. He used to work for Vale SA and Nexa Resources. It seems like they are bringing in someone with a lot of experience in similar industries. They say that 3 of the 6 directors will be independent, meaning they don't have close ties to the company. Molly P. Jung, Dennis A. Johnson, and Tito Botelho Martins Jr. will be the independent directors. They talk about how the board is divided into classes with directors serving staggered terms, meaning not all directors are up for election at the same time. It's a way to ensure some continuity. Mr. Martins and Mr. Johnson will be Class I directors. Ms. Jong and Mr. Machunu will be Class I directors. Ms. Jong and Mr. Machunu will be Class III directors. And Mr. Tall and Ms. Sikwila will be Class III directors. And Mr. Tall and Ms. Sikwila will be Class III directors. And Mr. Tall and Ms. Sikwila will be Class III directors. It means that some directors will have a term that extends to 2026, others to 2027, others to 2027, others to 2027, others to 2028. The company says that after the business combination is done, Molly P. Jung, Dennis A. Johnson, and Tito Botelho Martins Jr. will meet the requirements to be considered independent under SEC and NASDAQ rules. They also mentioned the audit committee, which is responsible for overseeing the financial reporting process. Ms. Jang, Mr. Johnson, and Mr. Martins will be on the audit committee and will be independent. The compensation committee decides how much the executives get paid. Tito Botelho Martins Jr. and Dennis A. Johnson will be on that committee. And again, they will be independent. Lastly, they talk about the nominating and corporate governance committee, which is responsible for nominating directors and overseeing corporate governance matters. Molly P. Jung, Dennis A. Johnson, and Tito Botelho Martins Jr. will be on this committee, and they will also be independent. Now we get into who owns the company. This is always important because it shows who has the most say in what happens. Here's a table that shows how much of the company various people and groups own. Ibrahima Tall owns about 3.4% of the company. Tulani Sikwila owns 8.5%, Safiel Machunu owns 1.7%, Hennessy Capital Partners, the LLC, owns 1.7%, Hennessy Capital Partners, the SLLC, owns 1.7%, Hennessy Capital Partners, the SLLC, owns 11.7%. Hennessy Capital Partners Aziz LLC owns 11.7%, and the Southern Celeban Trust owns a whopping 60.3%. This trust clearly has the biggest stake in the company. The company reminds everyone that they've filed a bunch of documents with the SEC, including a registration statement and a proxy statement. So people can get all the information they need to make a decision about the business combination. Basically, they're saying, do your homework before you vote. They say that Greenstone, the company, Pubco, and their respective directors, executive officers, and other members of management and employees may be involved in getting the company's stockholders to vote in favor of the business combination. The company also includes a section on forward-looking statements. This is where they talk about what they expect to happen in the future, but they also warn that things might not go as planned. They list a bunch of risks and uncertainties that could affect their actual results. In short, they're saying, we're making predictions, but don't hold us to them. The company states that this report isn't an offer to sell or buy any securities, and that any offering will be made through a proper Texas. Overall, this finding tells the story of a company trying to merge with another. But they had to make a last-minute change to their director nominees and postpone their shareholder meeting. It seems like they're bringing in someone with a lot of experience in the industry, but it's always a little concerning when things change at the last minute. Also, the company has its shares being traded on the OTC market. This is a concern as many companies would like to be traded on more renowned markets such as the Nasdaq or the New York Stock Exchange. So what's the final word? Hennessy Capital and Greenstone seem to be pushing forward with their combination, but the directors swap and meeting delay add a layer of uncertainty. Whether this deal will benefit shareholders in the long run remains to be seen. Alright, that's our breakdown of Hennessy Capital's latest filing. What's your take on these last minute changes and the potential merger? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.